Good morning and welcome to the Weekly Insights with John Plassard by Cité Gestion. SpaceX's upcoming IPO is not simply another public offering. It is a full-scale test of the market's current appetite for risk. With a targeted $75 billion raise, an indicative share price of $135, and a valuation approaching $1.75 trillion, SpaceX would surpass virtually every major IPO in modern financial history. Yet, the most fascinating aspect is not its size. It is the narrative investors must embrace in order to justify such a valuation. Morgan Stanley now projects SpaceX could generate $3.4 trillion in revenue by 2040 and approximately $2.7 trillion in adjusted EBITDA, implying margin approaching 80%. To reach those levels, the company would need to evolve from roughly $20 billion in revenue today into one of the largest profit-generating platforms ever created. Goldman Sachs and Morgan Stanley already forecast revenue near $160 billion by 2028 and between $330 billion and $470 billion by 2030, driven primarily by artificial intelligence-related activities. In other words, investors are no longer buying only Starlink launch services or the vision of Mars exploration. They are buying the belief that SpaceX will become a global infrastructure provider for connectivity, AI computing, data transmission, and technological sovereignty. Historically, mega IPOs have never been neutral market events. Alibaba, Saudi Aramco, Visa, and Meta all generated significant short-term market distortion, though rarely in a straight line. Large IPOs typically create an initial liquidity vacuum as investors sell existing holdings to fund allocations, while underwriters engineer scarcity and retail enthusiasm builds. Eventually, index inclusion becomes the dominant driver of demand. In SpaceX's case, S&P Dow Jones Indices has declined to accelerate its admission into the S&P 500, preventing an immediate wave of forced buying from passive funds. However, faster inclusion in broader benchmarks could still generate substantial technical demand despite a relatively limited public float. History offers a useful lesson. The best companies do not necessarily produce the best IPO investments at the initial valuation. Research from Jay Ritter consistently shows that IPOs launched during periods of extreme optimism often underperform over time. SpaceX may ultimately become one of the most successful companies ever created. Yet at a $1.75 trillion valuation, investors are not simply buying a company. They are purchasing 15 years of flawless execution, extraordinary technological dominance, and near-perfect financial outcomes. Thank you very much. Have a great week. Stay safe and keep on winning.